welcome on board Mr. Gautam Sinha Roy as well. He's the Senior Executive Vice President and Fund Manager Investment at ICICI Prudential Life Insurance as well. Gautam, hi, thank you so much for making time and speaking with us. Let's begin by discussing the auto space because that's in the news. Of course, Ayesha Motors reported a great set of numbers and now we're expecting numbers from Tata Motors. Your take on the auto space and any favorites there?
Good afternoon. I think it's a very pertinent point that you raised that, auto as a sector is doing well. We have the results of some of the companies. More is to come. I think this is a trend which will continue for the most of this current, at least the first half of FY24 is something where we'll see both volumes picking up, margins being strong, as well as, the profit growth YOY being very strong. So this is definitely looking like a very good construct. Only thing I would be mindful of, if at all, is which of these stocks are more structural in nature, which of these stories are more structural in nature, and maybe prefer to put the bets on some of them where we continue to see volume growth beyond FY24.
Okay, watching out for that volume growth. But what about IT? Very, very big distinction in terms of how the large cap IT has performed versus mid cap IT. Do you think it's the case of just a lag effect coming in for the slowdown in mid cap companies, or they're continuing to likely to outperform?
Yeah, so this dichotomy has been quite stark, honestly. So one should be cautious that, some of the mid caps which have been doing very well, they could also see some sort of slowdown because the demand environment there in the US is slowing down. But we also believe that this is a very shallow sort of a cycle for IT. So while next couple of quarters could continue to show weakness, but beyond that, what we expect recovery, not a very rapid recovery, but IT is a sector which structurally looks like a 9% to 10% USD growth story. And within that, again, you have to, pick your winners because some of these stocks will grow much faster than that.
Gautam, hi, afternoon. What's the view on cap goods? Because while manufacturing clearly seems to be the darling theme in the market, what we've heard from L&T is clearly making investors a little uncomfortable purely on the execution timeline, I guess.
Correct, Asha. I think there's a dichotomy there too. I think the EPC biggie of the country is seeing some bit of a challenge in execution and margins. But if you look at the pure play cap goods technology companies, they are having a fantastic run. So we continue to prefer more of the, the cap goods, pure play cap goods companies in this space, although the valuations now are demanding. So it's not like, again, not something that you can.
Okay, Gautam, stay with us. We seem to be having a bit of a, video issue as well there. We'll take a very
conversation with Gautam Sinha Roy. Gautam, what's your take regarding the entire financial space? And if you can help us, differentiate between how private sector banks versus the public sector banks are placed?
I think financials as a space, especially the private sector banks, if you see, they're quite cheap in terms of their P's as well as price to books. We are seeing good credit growth, NIMs being at a record high, credit costs being low. So everything is hunky-dory for the private sector banks. I think that's one sector which should continue to do well for the rest of the year. Now, PSU banks have, of course, had a huge rally. So a bit, and nothing wrong with them per se, a bit of a caution in terms of the valuations having caught up to more normative levels. That's the only thing that we can see. And especially when it comes to deposit growth, we can clearly see that the private sector banks are doing much better there. So that's why a preference for private sector banks, especially the larger moated companies there, would be our stance for the rest of the FY24.
Right. Okay. Just, getting set, of course, for the Supreme Court announcements on the Adani Hindenburg row. In the meantime, Eicher, Intellect Design, they really seem to be these stories today. Lalpat Labs as well has surged up quite a fair bit after its numbers, 6.5% higher there. Glenmark is looking very strong, 5.5%. Okay, Cipla's numbers 526 versus the Etina Polar 765. There has to be some extraordinary component there or a one-off. We will try and get you more details on that, because if that is what the operational figure is, that's a stark fall from what the market was anticipating. And to think of it, Cipla has been one of the best performers all through 2022. when it came to the pharma pack at least. And you are seeing a bit of a knee-jerk reaction come by for Cipla, 1.25% lower. Anisha, any more on the numbers? Because this seems a little off.
There is an exceptional item, you're right. 182 crore loss is what they're reporting with respect to the exceptional item, and that's why the profitability is looking lower than what the street was penciling in. Having said that, the revenue has come in all right, it seems. The total revenue from operations stands at 5,739 crore, and that compares with 5,260 crore. Maybe we should put up that exceptional in the flashes as well, so that the street is aware that there is a one-off of around 182 crore as an exceptional item, and that's the reason we are seeing a bit of a miss, because if you add it back to the profitability figure on your screen, then the numbers look in line with expectation or even a smidge better. The revenue for you up on the screen, which is in line with expectation at 5,739 crores. Segmentally speaking, we don't have much details. It's just the pharmaceutical vertical which has the highest concentration there, and we'll wait by to get more details from the press release as to how the India business has done, because the other of the pharma peers have been very, very volatile with their earnings as well. But overall, I wouldn't completely call it a bad set of numbers as of now. We'll have to look at the operational performance, because PAT is of course impacted by the one-off, and the revenue look in line with expectation. In the meantime, Gautam, what's your take on the pharma stocks at this point of time?
I think off late we have seen a fair bit of rally in the pharma stocks. There were multiple hypotheses. One of them was that the generics pricing in the US is coming down. Domestic growth has been decent, I would say. So multiple levers have played out. Margins have also been better. And above all, we have seen a couple of big product launches coming through, which has helped the sector. So I think a fair bit of rally has happened. And especially given that now the results are getting a little bit tepid, there's no harm in taking some money off the table in some of these names. Of course, there you have to differentiate between the Indian pharma names and the more US generic oriented ones. The US generic ones being more cyclical, the Indian ones being more structural in nature. So I think the preference gradually is shifting towards more of the India-focused names, especially ones which have a fair bit of chronic mix in their overall business.
Gautam, on that note, we let you go. Appreciate you joining us on the show.